Good morning, everybody. Today is Wednesday, April 22nd. And here is our pre-market analysis, QOL Trading. If you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video. And down below, you can join our trading community by hitting that link. And we do live trading from 9:30 a.m. to 11 a.m. Eastern Time. Right now, we don't have any economic data happening today that's impacting the U.S. However, there is a ceasefire that's happening right now, giving more time for the fractured Iran government to come up with a deal right now. I think it's being led by Pakistan right now. So anyways, that seems to be holding up the markets. I don't think the market, I think it's already priced in right now. So let's get into things right now. Here the VIX is down below, getting closer down below our 200 moving average. 1825 is where we'd like to see that. However, we have some gap downs from April 8th. 2574 is a gap down. Then the last final gap down that we have is $30.34. And that is from March 30th. Anyways, it is, we have a little gap up here from the other day, so that'll probably get filled within the next couple days or so. But still, you got to pay attention to these the gap downs that we've had here. Eventually, there will be some housekeeping, and that'll end up filling for us. So let's get into the oil markets. The oil markets are still kind of elevated here. Here's Brent crude right now. It's hovering right above, just below the 20-day moving average at $100.59 a barrel. And so, it's at the higher end of things right now. We'd like to see it dip below that $50-day moving average, sitting at $91.15 a barrel. That would be nice. Still kind of elevated though, surprisingly. So we'll see what happens there. As far as Brent regular crude right now, which impacts the U.S., $90.78. Kind of in the closer to the 50-day moving average, down at $85.90. I'd like to see this dip below, get back closer to the 100-day moving average, 72.74. However, in my opinion, I think that we could be approaching. This could be a new norm for oil here. That being said, it's still kind of flat right now. Things are kind of consolidating and just kind of a wait and see game going on here. So let's get into the ES. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button. I like the way the channel is growing organically. No advertising. I have not done any advertising. It's all just been just showing up every day, 8:30 a.m. Eastern time every day. Routine Monday through Friday. Very rarely miss a day. If I do, it's because I'm traveling, and I have not paid for any advertising. And growing organically, we're at 117 subscribers. I'd like to get us, north of 500, and hopefully you guys are getting something useful out of this channel. I always say if there's other things that you want me to cover, drop a note down in the comment area, and I'll be glad to cover it. I know I owe some levels to my buddy out in Zurich. I'm going to be placing those in the Discord levels channel for you. I'll probably do that later on today. And then aside from that, I do not cover any penny stocks. So only stocks that are liquid and that are making money. So Mag 7 are pretty good stocks. You don't need to trade a lot of stocks to make money, people. All I do is trade Tesla. It's the only thing I trade. Tesla options, that is. So anyways, getting back into it right now. We don't have any levels above this 71.85.75. It's the all-time high. The best I could do is give you an extension of the Fibonacci at 127% extension at 72.3641 is the next level. If you break above that 71.85.75, down below, we have some open point of control levels that are open. We have one open from the 16th at 70.69.45. We have one at 70.34.76, and that's from the 15th. We have one which is a major one, and I think that this is the money one, money shot right here. You want it's a 76.4% retracement from the Fibonacci level, 68.73.94. I like that, and it's also this point of control from the 13th. It also aligns with the 100-day moving average, sitting right at about 68, 65, call it. So I would like to see that, the market pull back to that level, and then we go higher. So your thesis right now should be pullback longs right now, because we are above these moving averages. We're well above the 20, well above the 50. The 50 is sitting at 68.13. 100 is sitting at 68.65. 200 is below everything else. So everything is definitely elevated, and as you can see, everything is just stair-stepping higher here, right? So be healthy for a nice little pullback, maybe a pullback to a previous all-time high at 69.5375. That was set from October of 2025. That would be a decent level also. I would like to see this point of control level filled, though, and closed out. It's not too often you see these point of control levels open on the broader market. So that being said, let's get over into the SPY. We'll look at the SPY. SPY is going to be very similar to the ES. Same thing, 712.39 all-time highs. Your Fibonacci extension 127% is 734.01. If you get above that, I do not have any other levels in between that. On the downside here, let's look at our first downside. You've got a point of control that was filled from the 20th. I will take that off the screen right now. So you've got yesterday's close sitting at 704.08. You've got a previous all-time high from the 16th at 702.28. Kind of bounced right off of it yesterday's last 15 minutes of yesterday, and then rallied off of that. So it kind of held up a little bit there. So, but like I said with the ES, I'd like to see a significant pullback. You've got this open point of control at 682.26. It's the only open point of control that we have on the SPY on the downside here. So, you do have a midline regressional trend line. It could give you some support at 700.32. Previous all-time high at 697.84. Take a snapshot of these levels. If you're trading the SPY, these levels will give you some support while you're trading. If they don't, you have your certain levels on where your fail-safe is going to be. Personally, if I'm taking a trade, the first thing I'm looking at is where's my stop going to be. So would I take a long right here? To me, that would be pretty risky for me, because I don't know where my stop would be, right? I would be more comfortable taking a long right here, because I know I would put my stop right below here. So I'll take a long at 691.66, put my stop below 689.71, right? So nice tight stop. If I took a long here, then I could possibly take it and run it back into the previous all-time high. So that's my strategies when I trade. When I trade, I'm always looking at my first thing I look at when I'm taking my trade is where's my stop going to be, not how much money I'm going to make. Take a snapshot of these levels. These levels will probably do you some good here. Again, same thing on the SPY as the ES, well above the moving averages. So the market likes to gravitate back to these moving averages, test them, and then bounce off them. So right now you're looking for pullback longs, because we are above the moving averages, right? So if you fan out a little bit, same thing, stair stepping higher, right? Right now we're in consolidation pattern here. You can see right now, just not making a move one way or the other, just kind of sitting and waiting game, seeing what our administration is going to do with this Iran war that we're in right now. So NASDAQ, same thing, all-time highs, 26,901.75. Nothing on the upside. I've got the extension of Fibonacci extension, 127%, sitting at 27,931.17. Quite a significant move on the upside there. Same thing on the downside here. We've got these open point of controls. We do have a point of control open from the 15th at 26,181.18. And again, we have all these highs here that could be used as good break and retest, right? So the break and retest system, you break a level, you come back down, you test it, see how the market responds there to go and take it back into that other direction, right? So all the markets right now, we are looking for pullback longs. Why are we looking for pullback longs? Because we are well above these moving averages, which is telling me that we are in a bullish pattern right now. That doesn't mean that we're going to the moon and never looking back, right? So the market will tend to pull back to these moving averages at some point. The question is when. If anybody could answer that last part of that question, that's where your money is made. If you can answer the when part of the question, so for everything, right? I was talking with my brother yesterday, actually, and we were talking about these point of controls, and he said, well, is it going to hit the point of control, lower point of control? We're talking about Tesla. Is it going to hit the lower point of control first and then go and make new highs? Or, and I said to them, well, no, it doesn't always work that cleanly. It could go up, make new highs, and then come back down and hit that point of control. And I'll get to Tesla and I'll tell you more about what we were talking about yesterday. But same thing on the NASDAQ right now. As you fan out right now, you see stair stepping higher, but right now we're consolidating here. We're in a little consolidating pattern. I would like to see these pullbacks. You do have this open point of control down here from 415 at 26,181.19. And then this last open point of control, which we don't see these open point of controls too often on the broader markets, from the 13th of April at 25,310.68. So quite a bit down there. So take a snapshot of these levels, use these levels if you're trading them. And then as far as the upside, like I said, I don't have anything to measure up here other than a Fibonacci extension of 127% at 27,931.17. So pullback will be extremely healthy for the marketplace, right? We don't want to go straight up. But I will say this, though, I don't mind this grind higher, right? I'd rather have the grind higher than something like this, than a big snap up, than a big push higher, right? The grind higher to me is, it's more stable. I like the grind. The grind is good. So let's get over into the Qs, and then we'll get into Tesla, and then we will call it a day. Let's start from up further out. Same thing, stair stepping higher, consolidation right now. Now, when I say consolidation, it means that it's just kind of going flat. That means that consolidation, buyers and sellers are just sitting here, possibly taking positions. You don't know if they're taking a short position. You don't know if people are taking a long position right now. They could be gearing up for a breakout and pushing up into this 127% extension, up into that 674.49 level, right? So this could be consolidation, buyers taking positions, institutions taking positions, and waiting for that push. I think from an institutional, from a retail point of view right now, I think all retail people are concerned, and they're sitting on the sidelines, and they have risk off right now. And what does risk off mean? That they have their cash sitting on the sidelines and they're not putting their money in the market right now. Why? Because we're at all-time highs. It makes sense. Who wants to invest in an all-time high? I'd rather invest down here. Well, the funny thing is, this market, you were probably, the retail investors were probably saying that right here. Oh, I'd rather wait till the market comes back down here. Well, it never came back down here. And then same thing, they're probably saying the same thing. I don't want to invest right here. I want to wait till it comes back down here. And look at, just kept going and going and going, right? So, I always think a pullback is healthy. And right now, we still have open point of controls. We've got this open point of control down here from the 13th at 614.31. That would be a healthy pullback. I like that level. You could see these, and I know a lot of people that are turning in on this, that it looks like a lot of noise, right? So that's why it's good. Take a snapshot, a snapshot of these levels. And, I have little notes of what these levels mean. And I do some pretty extensive work when I map out my levels here. It's a combination of weekly highs, monthly highs, sometimes 15-minute highs, combined with fair value gaps, some more advanced support and resistance levels. But these levels mean something, and they bounce off of these levels. And so what does that mean? These levels are set up for me for day trading, for scalping, not for long-term. I could do long-term levels as well. And I have a long-term portfolio. But what I pretty much go over here on this pre-market, this is for scalping, for day trading. I am 100% flat every day and on my accounts that I trade in the morning on these levels that I go over for everybody. When I go over the broader markets, you go over the broader markets because it gives you a holistic view of what's happening in the marketplace, which then enables you to go down to your macro level and talk about your individual stocks and what you're trading, right? So getting back to the Qs right now, as far as what I have on the upside, getting back to that Fibonacci extension, 127% at 674.49. And then on the downside, like we said, we have some previous all-time highs. I was marking these. Once we plow through some of these levels, I'll be able to remove them to see how the market responds to them. Like you could see right here, this all-time high, 642.18. You go back and you look, responded nicely here, right? Responded very nicely here. Okay, so I go back. This is an all-time higher. So right now, I'm leaving. This is a good level. And why is it a good level? You can see how the market responds here. You can see that on the 20th, it bounced off of this level nicely. Yesterday, towards the close, bounced off it nicely. right? So this is a good level. So that level I would leave up there. So now we have to see if it loses that level, then it'll come down, and then we'll try and see what happens at this previous all-time high at 637.01. If you go back and you go back in time and you look, you see where it bounced off this level as well. So this is a good level. This is a very good level as well. So that's why I like these two levels right now. Not to mention this level 637.01 in particular, I like because it comes in line with the regressional trend line that I have here from October 13th, 2022. So this is a midline. So we're above the midline. And then, so, above that midline, you're going to get, move yourself a little higher here. I'm trying to see if I get, yeah. So here's another level that I actually have here from this level that I drew from the April of 2025. So if you get through that 674, I've got a 696.91 level there on the Qs. So that's part of this midline regressional trend line here. So we are above it. So as long as we're above it, you're looking for pullback longs. If we lose it, then you start pulling yourself back, and then you start looking for your lower levels, where they're going to come into play. So anyways, that being said, let's get over to Tesla. Again, if you're new to the channel, please subscribe to the channel, hit that thumbs up button, like this video, go down in that description area and join our Discord community through the WAP channel. And we're doing live trading from 9:30 a.m. to 11 a.m. Eastern time. Love to see you in there. Tesla. So Tesla, we've got something. Here's a perfect example of what I was talking about. This regressional trend line that I've had here. I've had here since January. I drew it, and I went as far back from January 17th of 2023. And look at how it just popped up here to the T. And this was up here. I've had this level up here for quite some time now. And what date was this? This was on 17th. This was on Friday, I think it was. Pop right up there, and like a rock star, bounced right off of it. Excuse me. So right now, so here's a perfect example of what I would take off my levels here. This point of control level that filled, it's showing me nothing. So I'm going to remove that. I got a sneeze stuck. Excuse me. So this 318 point of control that was filled from the 16th, I'm going to remove that because right now it's showing me nothing now, right? So now this is all about what these levels are going to show me right now. You can see this, we're below the 200-day moving average. Mind you, we have earnings today on Tesla. So I would be very careful in and out of Tesla. I would not be trading Tesla too late today. It's going to be whippy at some point. There'll be some leaks. There's going to be some news that'll probably come out trying to sway you one way or the other. The options will probably be very expensive. So I would probably trade like maybe a third of your lot size with the options. Right now, we're below this 200-day exponential moving average at 390.62. So this is what I'm talking about with these levels here. You can see as I go back here, it responded on this level. I know you dip below it a little bit, a little liquidity to grab, and you popped above it. But now look what's happening here, okay? This was support, and now this level is becoming resistance for me, okay? So during the day, if we happen to pop up this 390.62, I'd be looking to potentially take a short off of this level. Why? Because this was support. We popped through it, came down, support, came back here, lost it, came back up here, tried to get above it again, and now we're losing it. Okay, so that's what I'd be watching for today, and that's how you pay attention to your support and resistance levels. This 387.53 level is a February 2026 monthly low. I like monthly lows; they have a lot of validity. But you can see right now, this level right here is really not showing me much. I'm actually going to potentially take it off. Show me a little something here. Lost it here. It's not really showing me anything with substance. So I may leave it on there for a little bit, but chances are I'm probably going to take it off by the end of the day because I'm not sure if that's really going to show me anything. We've got the close down here at 386.42 from yesterday. We'll probably come down and test it. You've got a weekly low here from the 26th, from March 2nd. So I would say that in this area right here, this 385.39 level, this is what you're looking for. You're looking for that kind of a bounce. So yesterday it showed a beautiful bounce there twice. Not once, but twice. So that shows me that's a pretty decent level at 385.39. So what does that mean? Does that mean that when we get back here, I automatically take a long? No, it does not mean that. It means that if we lose this level, because it was showing good support here. If we lose this level, we could be heading further down and come down to your next level of support that you have here, which is the higher end regressional trend line that we busted through right here. And I think when did they bust it? It busted through when they came out with that announcement about Musk building some plants down in Texas for his AI 15 chip, right? So we busted through that level. We held through it. So this is an upper end regressional trend line that we had here from the previous highs, all-time highs from December 26th of 2025. So we come back down here. So there's a good chance if the market does come here, we use this level as support, right? A break and retest, right? You break the high level, you come back down. Could use that as support. 381.81 if we get down there. I like that level for possible support. If you lose that level, here's the problem. Let me remove this. Here's the problem. This is the problem. And I said this earlier on. I like a grind higher, right? A little slow grind higher. I don't like these huge moves up, okay? Why? Because this becomes a speed zone. So if we potentially lose this 381.80, even though I like this for a long, if we lose this level, all of this becomes a speed zone. What does that mean? That means all these people that are long here are saying to themselves, oh no, I think that I'm wrong here and I may have to get out of my position. And they quickly reverse their position, and then you move back down here to the 20-day moving average, which is sitting at 369.30. Not to mention, I've been talking about this every day. We still have this open point of control left at 333.78. If I clean this up for you, this is better to look at. Actually, at 334.07 is the point of control level that we have open here. And this is what I was talking about with my brother, that we have point of control levels that are open. And let me remove this price level. Remove that price level. So we have point of control levels that are open above us. We've got a point of control level at 455.12. We've got a point of control level open at 478.39. So now, the when part. This is what I was saying earlier. If anybody can answer the when part, that's where your money's made. So if you can identify when this is going to happen, that's how you make your money. So do we come up here and fill these open point of controls first, and then come back down here and hit this point of control open that's 334.07? Or do we come down here, hit this 334.07 first, and then we make our way up to the new highs? Ideally, for housekeeping purposes, I would love for us to hit this first, and then so we could start making our way back up, because this is the last open point of control that we have open since September 4th of 2025. And you could see we got real close to hitting it. 337.24. It didn't quite get down there on the 7th of April. I really wanted to get there so we could close that up and move higher. There was a point of control that we did close up from the 15th. I took that off the screen already. Actually, no, I didn't. I still have that here. This 366.81 that was filled on the 320.26. So I leave these point of controls open until they fill. Sometimes they take 9 months, right? So we had an open point of control level that was on the charts for 9 months last year. So we have to watch that. So as far as Tesla's concerned here, we are above the 20-day moving average at 369.30 and kind of caught in between that and the 200-day moving average. So in order for Tesla to really get a good pop and start moving higher, you gotta pop and hold above that 399.61 level. And then as far as intraday trading today, like I said, we have earnings. I would be careful today with the earnings coming out later on this afternoon. I would keep your lot size small and get in and out of your trades quickly, because any kind of news is going to make this market move quickly. This 381.80 level is a big level. If you lose it, you could see right here, this is definitely going to become a speed zone, and we're going to pull back down here right into this 20-day moving average, and then into that 20-day moving average, which is also, what do we got there? That is also a breaking structure at 368.33, and I think that was from like March 22nd there. So let's get into what we're going to trade for today. Even though there is earnings today, we still trade in the morning. So we have, because there's earnings today, there is no expiration date for today. As of January 26th, They had expiration dates Monday, Wednesday, and Friday, but now because there's earnings today, they do not have expiration date for today. It would just be too wild. The IV implied volatility would be way too much, and the prices would be crazy. So we do have expiration dates of Friday, April 24th. I have a 400 call up there that would close yesterday at $6.15, and I've got a 375 put that closed at $6.40. So kind of even space apart, and you can see right now we're probably, we're about $12 away on the call side, and we're about, similar amount on the put side. So you can see these premium prices are very similar. So I would anticipate, we are above the close yesterday from 386.42. So this premium will be a little deflated, maybe in the high to mid to high $5 range. And then this premium of the $6 range could be in the high sixes. I don't think it's going to be that crazy yet, but I'm not sure what the expected move is on Tesla. I did not even look at it yet. I quite honestly, I'm going to be done trading Tesla pretty early on if I don't do anything stupid, because I do not want to be in this market later on in the day because it's going to start to get pretty volatile. Let's take a look. Take a look at our 5-minute opening range trade, which we go over every day. Let's go here. So you're going to get your trade every day, right? You just got to be patient. And it was pretty wicky for most part of the day. And I said yesterday while we were in the trade room that we could potentially, because we have earnings coming up, that Tesla was just going to kind of potentially stay within a 5-minute range. And a lot of times it does that. And you have to recognize that the institutions are just kind of playing a waiting game. And yesterday's opening range was 389, I call it 389 even to 393.38. And then it finally broke, and then it popped right up, right? And it had some levels. It broke on the upside first, and I did not take this trade. Why did I not take this trade? Because of a thing I was talking about earlier, a break and retest. We broke this level, and this level is a 394 level. It was a high, and I don't have where I marked that high, but I had it at a pretty significant level. You could see how it responded here in pre-market, even though that's a flash wick. So I did not take this breakout here. Normally, I would be interested in this because we're above the VWAP. We finally got above the opening day trade here, but during the trade room, I did not take this trade. Now, so if you were patient, then you waited here, could have taken the trade here. I think I was taking like little tiny trades all day long to squeak out a little profit. And then you finally got your move later on in the day. So, when you sold you broke your 389, you could have gotten yourself about $4 for the day, but that's to be expected on earnings week. So today it'll be volatile. So be small on your lot size, preserve your capital. Today's not the last trading day in the world. I would see how things are going to be moving. If these options are going to be crazy, there's nothing wrong with taking a day off and just letting things settle out and then find its direction tomorrow. And we'll be a little wiser tomorrow, and then you'll still have a couple days left on your options to expire. So that being said, we're going to start with 400 calls and 375 puts, both expiring on Friday. And again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. Go down into the description and join our Discord community through the WAP link. And live trading 9:30 a.m. to 11 a.m. Eastern time. Hope to see you in there. If we don't see you in there, we will see you in the pre-market analysis for tomorrow. Have a great day trading, everybody, and keep it light. Talk to you later. Bye.